your retirement is just a few years away, it may be time to adjust your investing strategy.
The shocking statistic is that by the time somebody reaches 65, 95%, they're dead broke, they're dependent on family, or they're dependent on government.
It's important that people deal with someone to make sure to prove and provide that guaranteed lifetime income.
Welcome to the Retirement Architect, David Reyes. Our program is designed to not only provide insight, but to educate and to give you the tools you need to help you design and build a rock-solid retirement.
Wow, what does that sound? It sounds like an alarm clock to me. This is your wake-up call. How about that? Finally seeing some significant volatility in our markets, and I've been talking about this for a long time. And I think that most of you out there have been pretty complacent, and I say that because I review your portfolios every day, and I see an underlying amount of risk. I was doing an analysis for a client the other day, just this last week. And they had, thought, oh, I'm conservative. I don't want to lose a lot of money, and I'm about to retire. And I analyzed their portfolio. And if we have another 2008, they would lose about 35, 40%. And they had no idea. It's something that really needs to be addressed. And this is your wake-up call. You need to evaluate your risk. You need to evaluate, are you going to have enough money to retire, and making sure you have a plan. We're going to talk about that, but I really need to get you up to date with what's going on with the markets. And I don't talk specifically about markets every day, and there's enough information out there on them, but I'm going to give you some context today. I did a lot of research over the weekend here. And, we've had, for instance, Apple, who's a big leader in the tech sector, is down 20% from its highs, which is bear market territory. You have the Russell, which is the small company stocks, the Russell 2000, is down 10%. Now, that's a correction. Okay, we haven't had a 10% correction in the S&P 500 in almost 4 years, the second longest time ever. We have the Dow Jones Industrial is down over 1,600 points from its high. That's a 9% loss. You have the S&P 500 down over 5% from its highs. You've got the Chinese stock market down 35% from its highs. You have the German stock market down 14%. The Japanese stock market down over 10%, nearly 13%. Then you have emerging markets, countries like Spain, Portugal, those types of Brazil, down 27%. You got oil down 62% from its highs in June of 2014. You got a leadership stock like ExxonMobil, considered a very conservative dividend-paying stock, down 30% from its highs. You've got high-yield bonds, which are kind of a proxy for stocks, but high yield, high risk, down 10% from their highs in July of 2014. And these are just some of the things. There's so many more things I could talk to you about and it's like, hello, that's why, the alarm clock has gone off. You got to make sure you're protected. You got to make sure that you have a plan. And unfortunately, most of you don't. And that's what I'm here to help. So if you want to there's two things I can do for you today. One is you can go to my website, and we have what's called a wealth crash test, and it's really awesome. You go to the first page to the right, and it'll say wealth crash test, and you just put in your information. It's really simple. You can actually download a statement, and you can actually have the numbers there for you to look at what is your risk in your portfolio. And just go to reyesplan.com. That's REYES plan.com. Again, reyesplan.com. But if you want to talk to me personally, okay, and you want to set up a second opinion to look at the risk in your portfolio, to really look at your retirement, right now is the time to do it today, because I don't want to see you in a situation where you're down 20, 30, 40% in your portfolio, and you're like, shoot, I should have called David. I should have asked him about ways to protect my portfolio that we talk about every week on this show. So if you want to get a second opinion from me personally, David Reyes, 1-800-611-1967. That's 1-800-611-1967, and ask for a complimentary second opinion. So we'll get back to that, and I want to get back to the markets here on this first segment, because we've had a lot of underlying turmoil. When you see oil down over 60%. When you see emerging markets down almost 30, you see the Chinese stock market down near 30% plus. You got to pay attention. And I've been watching this happen, and we're really the only untouched market, quite honestly, in a global economy. And you can't ignore that stuff. And unfortunately, you don't see a lot of that in your underlying portfolio. And if you own S&P 500 stocks or those types of things, you've not seen the impact of this type of drawdown or loss in other markets. And so it's going to come to your portfolio. We're also coming into a time of year that's very negative for stocks. September, October is really some of the worst times for stocks in the historically in what's called the seasonality of markets and kind of the ebb and flow of the markets. Plus, we're coming into a political year of where we have the president the year before the elections, and that's usually a bad time for markets. We also have a potential issue with the debt ceiling in October. I think for the new funding of certain programs that need to be funded again, you've seen this broken record where the Democrats and Republicans will fight over what this debt ceiling will look like. It's kind of this artificial line in the sand that has caused markets to falter. And of course, the elephant in the room is the Federal Reserve. And what are they going to do with interest rates? Are they going to raise interest rates? I think they'd be nuts to raise interest rates right now, but it's out there. And so there's all these headwinds with the market. And you may feel the excitement in my voice or the concern or the intensity, but it's because I want to make sure you realize that this could be a turning point in the markets. And I'm not an alarmist, no pun intended, with the opening of my show. But the point is that I want to make sure that you're prepared. I think this little jolt in the markets is a great time for you to get in a mindset of, wait a second, this bull market is not going to go on forever. Am I protected? So if you want to speak with me personally about that, the best way first is go to my website. And we have a great new addition to our website, and it's called a wealth crash test. And we have a lot of people using it now. And you just go online, go to reyesplan.com. That's REYES plan.com. And go ahead and put your information in. It's really simple. You just upload a statement. It's all secure. Every institution, whether it's Fidelity or Schwab, they've signed off on this. So it's their data, your data. We don't have access to it, but it will put in your information, and it will actually spit out a risk profile for you and that we can talk to you about. So again, go to reyesplan.com. That's REYES plan.com. And if you want to speak with me personally, give me a call again, 1-800-611-1967. That's 1-800-611-1967. And I'll finish up this segment, but I want to talk to you about the R word here. And the R word is recession. Believe it or not, there is a lot of talk now, and I've heard it for now a few weeks now, a lot of talk about recession. And that kind of seems crazy. Our markets have been doing well. And the economy is picked up, nothing spectacular. You have unemployment that's down in the 5.5% range. Inflation's low, and so housing's really doing well. But really, under the surface, we're having a lot of issues, and we're not the only person. We're not the only country that is involved with this. We're an interconnected world now, and we only represent I think it's 20 trillion. I forget the number. I think I have it here. The percentage that we represent about 18 trillion of a total global economy, which the other rest of the economy is 60 trillion. So the other rest of the world, we used to be the dominant economy, but now the global economies of Europe, Japan, China, all the rest of the emerging markets, they make up more than twice of what we have. So you can't ignore when you have all of this uncertainty and all of these collapses of stock markets across the world. It's going to trickle down to us. When you have oil fall like it has, you have gold that's been really beat up. You have, again, all the other countries I talked about earlier, and we have, again, the Russell 2000 in a correction down 10%. You have Apple down 20% in a bear market right now. It's gone from about $130 some odd a share down to $110 a share in a relatively short time. So again, if you want to get a second opinion, give me a call again, 1-800-611-1967. That's 1-800-611-1967. Or if you want to go online, go to my website, reyesplan.com. That's REYES plan.com. And go to the Wealth Crash Test, and you can go ahead and get a complimentary crash test of your portfolio to see what type of risk you have. And again, that's reyesplan.com, REYES plan.com. Stick around. I'm going to talk about, are we headed to a recession? Again, this is David Reyes, AM 760, KFMB.
You're listening to the Retirement Architect, David Reyes.
Common sense or amazing guesswork?
No guesswork here. The Retirement Architect, David Reyes, will continue next.